road trip in the countryside. Suddenly, your car is running out of gas. What's the first thing that comes to your mind? Good morning, ladies and gentlemen. We are Team 4, and we are here to present an opportunity stock, PTG, analyzing its financial performance, valuation, investment risk, and corporate sustainability. PTG is the second largest oil retailer in Thailand with revenue of nearly 70% in diesel and around 27% in gasoline. Now, the company is diversifying its business into other areas such as transportation and consumable products to create a positive momentum in the company's growth prospects. We place a buy recommendation on PTG with a target price of 20.87 baht, indicating a 28% upside potential. We see PTG as a black horse in the retail oil industry based on 3 key pillars: steady revenue growth with favorable expansion, cost optimization through diversification strategy, strong fundamentals, and sustainable financial performance. Let's start with our first pillar. PTG has rapidly moved from the 5th to the 2nd position within 4 years, gaining nearly 14% of the total market share and over 2,000 service stations. In terms of oil sales volume, we expect PTG's sales volume to continue growing at 6 to 8%, aligning with the estimated growth rate of Thailand's GDP and petroleum products. Despite the current market conditions, there are other positive factors supporting the company's growth. Land transportation is showing signs of faster recovery due to the ease of lockdown and tourism resumption. Additionally, PTG has the greatest number of loyalty members when compared to its competitors. The company has strong presence in the countryside and is starting to expand more stations into Bangkok in order to capture higher sales volume from high margins of gasoline sales. Let's move on to our second pillar, cost optimization. Historically, average setup cost per station amounts to 15 million baht. With PTG's light asset strategy approach, cost has been reduced by 40% through acquiring non-branded existing service stations. Hence, the company is able to operate its business more efficiently.
6 out of 7 main petroleum products contains a proportion of biofuel, making up to 76% of Thailand's diesel and gasoline consumption. With PTG's 40% stake in the PPP Green Complex, as a palm oil producer, the company has set a foundation for sustainable revenue stream, further optimizing its costs. PTG is a pioneer in building its follow-up service stations, while its competitors mainly use franchises. Its non-oil segment contains margins up to 3 to 4 times higher than its oil segments. Towards the future, the company has plans to increase its contribution margin from its consumable products up to 40% by obtaining higher demand as they expand into urban areas. The final pillar that makes PTG outperform the market is its financial performance. PTG brings in superior efficiency as it has a negative cash cycle over the years in comparison to its peers. This is in light of 3 reasons. The first reason being is its long operating cycle due to its strategic alliances and partnership with its suppliers. The second one being its lower inventory days, as they were able to optimize their tank farm locations. And finally, the competitive business model as a pure retailer. With its superior efficiency and high asset turnover, PTG has a high ROE, which is significant as it moves along with the market. Historically, as the company expands aggressively, high capital expenditures and financing is required. PTG's EBITDA is insufficient enough to fund this growth, which is why they have increased their long-term debt borrowings. This is unattractive when comparing the net debt to EBITDA with their peers. Towards the future, PTG has shifted its focus into diversification strategy, as well as expect to lower station expansions to support their growth.
Moving on to our valuation, we issue a buy recommendation on PTG based on a 1-year target price of 20.87 baht, indicating an upside of 28% from the last closing price. To derive our target price, our valuation is triangulated between its FF model, its valuation model, and historical P of peers at 60%, 20%, and 20% weights respectively. In our FCFF model, we use an exit multiple of 8.3 times, WACC 7.8%, terminal growth rate 2.5%. We calculated both exit multiple and terminal growth rate method, where we emphasize more on exit multiple as it depicts the current market conditions better. Combining both the methods, our intrinsic price 21.6 baht. Moving on to relative valuation, our price is 18.13 baht based on EV by EBITDA and forward P of peers. We believe that PTG deserves to trade at a premium in relation to its peers because of its revenue growth, efficient cost management, and well-diversified business portfolio. Currently, PTG stock is trading at a P level, which is one standard deviation lower than 4 years historical price, indicating another strong signal for a buy at 21.42 baht. Combining all our methods, our target price 20.87 baht.
From our tornado chart, cost of goods sold, selling expenses, and sales volume are the three most sensitive elements to PTG share price. Under our worst case scenario, we expect the COVID-19 pandemic will be controlled soon, leading the entire economy to recover faster and PTG expenses to decrease. As a result, the price could increase by 66% to 20.27.25 baht, recommending a strong buy. And with the bear case scenario, we still issue a whole recommendation at 16.68 baht, making PTG a safe stock to invest. Considering the favorable growth outlook for PTG, we determined in total 7 risk factors, with 3 more typical ones, namely competitive oil station, business expansion, and marketing margin. We believe that PTG can mitigate these risks by diversifying more into other business segments such as biodiesel component and taking advantage of their subscriber on PT market cap and prevalent across the countryside.
Apart from all the risks associated, we offer you with a safe and sustainable investment opportunity. PTG ranks among the list of Thailand sustainability investment stock for the 3rd consecutive year, based on 3 dimensions, governed by its board of directors and succeeding to a highly effective and adept management team. Over the years, this company has moved from a family-owned business to a responsible and committed business organization. It has won numerous awards for its good governance and high compliance to the regulatory requirements. PTG also possesses a high and robust risk management policy, managed by effective and committed teams of different committees. PTG's high commitment to the anti-corruption policy has led to its achievement in 0 complaints and no whistleblowing cases to date. As a social and responsible organization, it takes well care of its employees and adapted to the security and safety at workplace. It also deserves high respect for empowerment of the disabled, as it has already employed 8 different labor persons across the group. Finally, PTG's environmental disclosure is operating at a sufficient level. We have used several frameworks to derive a combined score of 2.72 on its environmental disclosure. And therefore, we believe that PTG can rank among the list of global indices in the very near future. Finally, and based on all our assumptions, valuation methods, and growth prospect, we believe that PTG has a high buying recommendation at 20.87 baht. And now the floor is open for question and answer. Thank you for being with us.
I'll start first. So you mentioned that the oil demand will be rising on the fact that tourist arrival should be coming back soon. I would like to ask, what's your expectation on the tourist arrival for this year and next year?
Thank you for your question. Well, Thailand's GDP has a declining trend in the past year. But going forward, and according to the estimates of World Bank, IMF, and the Bank of Thailand, there has been a positive outlook on the GDP growth rate. And we believe that due to the rollout of the vaccines, the tourism sector will revive at a slower rate than the previous level of the COVID-19. But obviously we see it as a positive outlook in the domestic growth as people have been under pressure in lockdowns.
Do you see this as a risk if the tourist travel are recovering back slower than expected?
I would mention one key point that PTG has been able to lift its sales volume even in the pandemic situation through its corporate sales and industrial sales. So I think even with that risk of tourism, PTG tries to maximize on its industrial sales and linking to other sectors, industries, in making successful.
My last question. So the target price is 20 something. I think share price now only provides 5% upside. Would you recommend a hold or you see potential upside in your base case?
From the base case, as of yesterday's last closing, it's already 19.5 baht. With the ups and downs over the next 1 year, we see that PTG has high potential and growth potential in the next 1 year. So our target price is highly feasible to be achieved for any investor going forward or making a bet on the stock. Notably, we see that the we see huge confidence in PTG's management. They have already lifted themselves from two major crises, the Tom Yum boom and also the financial crisis in 2008. And in this COVID-19, as you can see, they have also been able to maintain a stable growth rate. We find that a 28% upside recommendation is quite reasonable for an investor to invest in this stock.
I have some questions on your valuation. How did you come up with 60-20-20 breakdown?
Actually, PTG is a retail company and we focus on their EBITDA. So we firstly focus on FCFM method. Put the highest weight on FCFM 60% because it reflects the retail nature of the industry and also
I know, but why 60? Why not 70 or 100%? Why 60?
Actually,
Thank you. So I'd like to add on that division. So as you say, there is a retail company and the valuation actually composites more of the free cash flow. But given the market risk and condition of the market, we provided a lower way to capture those market assumptions or the market volatility and the market sensitivity. So 20% red, 20 and 20% are, we felt that it is quite reasonable to our assumptions, given more weight to the free cash flow model.
May I ask about the valuation again? You mentioned that you place 20% on the relative historical price principle. So let's say that if I made my decision on the stock, so I expect the future growth of the earning, correct? And then why do you place the historical multiple PE on the valuation?
Okay, thank you for your question. So the reason why we're using historical PE based on our valuation is because we want to know the current PE level the stock is trading. So currently the stock is trading at a lower PE level than its average in the past. So in the future, there is still more room for the stock to continue on increasing, even if we use the previous historical method.
Yes, I know, but let's say that if the stock you mentioned that have and let's say that have a higher than expected earning growth, so should they deserve the better PE than they currently have? And that's why the reason why I asked you the reason behind your relative historical PE using.
So I'd like to add to her point, we use the PE method, as you can see that this stock is undervalued even with our current valuation. And we have seen that historically, the market has not been properly able to capture the growth prospect of the company. And as such, while the earnings has grown, the price has still remained stable and being undervalued. So we put a 20% weight on PE valuation, that even if the market performs in an undervalued nature, our valuation can capture that aspect of the value of pricing.
So further to that question, given that the stock has de-rated since 2017, number one is why has it de-rated, and secondly, what will drive it back up? Because my key concern is the de-rating is structural. It might not, it might not return to where it was in the better years.
Thank you so much for the question. So there was a major event I would like to mention in 2017 that Thailand was hit by flooding and natural disasters that had effect on the entire market. And we think that again hit within a span of 2 years, again hit by a pandemic, the market has not risen to that previous level of performing at a higher rate. So its earning has risen, but the price is not yet reflected in the market. So we believe that it will take more time to reflect this price or the market efficiency in the near future. And as such, we provide a buy recommendation with an upside potential.
The market haven't been giving it the correct pricing, if you like. Why would it be giving it the correct pricing over the next few years? What would help that to happen?
Thank you again. So I'd like to clarify on that a little bit that PTG's movement historically has been according to the industry. If you look at the industry pricing, that it has always been benchmarked to its industry. Although it has traded a bit higher than the industry average, but it has always been at a lower level than the expectation. So I think that market prices are yet to be gained or realized by the investors to bring the price to that level.
Can you discuss a little bit about your downside scenario? It feels like on your valuation, it doesn't look a lot of downside, but maybe looking back in the past few years, right? I think it's much below your downside scenario. Can you elaborate more on what you see and make us confident, even in the downside scenario, and maybe you can address something about the trends of EV or in the longer term and that kind of thing. How should investors think about these stocks in the longer term, considering your downside case is not that much?
Thank you again. Thank you. So with the downside scenario, we estimated a hold position, not a sell recommended. So we believe in PTG's management prospect and with full confidence that even if the economy goes down in any adverse situation, the company has taken several diversification strategies on its.
Sorry to interrupt. Can you go right to your assumption? Yep.
Assumptions.
Assumption under worst case scenario, so we see the pictures.
In our worst case, we assume that like the cost of goods sold will increase by 0.5%. Then selling expense would increase by 0.5% and growth will decrease by 0.5%. That was the assumption for our downside scenario.
If I hear this correctly, everything is like moving up and down by 0.5% on the worst case scenario, right?
Yes, yes.
Doesn't it sound like very little, like 0.5 scenario on anything when we talk about worst case scenario? So yeah, but thank you for clarification. Thanks.
So that was another question. Sorry, I have an email. That was G8. Thank you for your outstanding presentation. So we have about 5 minutes. Any time have any recommendation for it to improve?
I agree with Kun Wit that the 0.5% is very small for the worst case scenario. And secondly, I think you might want to prepare a better response on why the stock would re-rate. Like what would help drive up the share price? Like you can say something along the line of, there will be stronger earnings growth when the economy reopens or whatnot, rather than hopefully the market will help re-rate the stock.
Add on, so it's difficult to say that the market is wrong at this point. If you expect something to real into giving out reasons why market can change the mood and coming up with this should already show that you expect money to grow significantly over the longer term. You can answer all that.
And maybe on top of this, very important point, right? If you can just saying at this market valuation, what is priced in? The market pricing in this kind of volume growth, this kind of earning expectation. So we will know immediately when you're talking about different number. It's not -3, it's 5, things like that. So people will catch it very easily. So to answer these two questions in a concrete way, okay? You turn around, stuff like that. But one quick thing for me, right? Your valuation is very interesting. I never seen this kind of like mixtures, and a very good question, right? About how many percent. This is something to think about valuation quite seriously. It's very unorthodox, I think. Yeah.
Thank you.
Allow me to add on the sensitivity pages. Like PT just mentioned, since PTG is a cyclical company, right? You mentioned earlier that 96% is our business, right? So I think the most important factors is the marketing margin, which is non-controllable. So I suggest just 50 basis point change in COGS is not reasonable for me, in my opinion, for this company.
We're going to add a little bit. So my question earlier on the tourism were the tricky questions. I know it's part of the assumption, but it's not a major part. Tourism is, I don't think it's contribute that much on your demand side. So my question, what we're looking for is how you look at this angle, you can highlight the risk and actual percentage of the growth or something you make in. So that's what I was looking to hear. Not like how you expect vaccination to come into play and how there's hope for its. We're not looking for hopeful scenario. We're looking for the actual impact. And also, that's in my second question on the share price. I know the upside now is limited, and you make a really good call because the share price really went up on the day you should report, right? So my next question on what do you see any potential upside in the future? The answer is something like have you been too conservative on that assumption, or what would be some catalyst in the term that could help you become more bullish? And what would be your recommendation as of today if things doesn't go as you are planning forward?
So that was the last recommendation. It's really quick.
Okay. I guess I am the last one, so please allow me to suggest you just one point. I believe that you have a very detailed research as well as a presentation, but if I look through your report or presentation, I think you want to focus on the valuation method, because in the real life, the valuation is the mix of the art and science. You cannot correctly capture the correct target valuation every time. So my suggestion is it should be better if you have more part of the business analysis. Yes.
So, art and science, keep that in mind, alright? Next time. Okay, so the presentation is complete. You can leave the building now, you can leave the venue. And please don't talk to any other teams about the judge question, alright? For your own benefit. We will announce the 4 finalists in the evening, and we will send you judge feedback and upload your today's presentation with